We're making money moves this morning. Today's Money Watch, we are talking about credit and the first decline in average FICO credit scores for Americans in a decade. A new report found the average score dropped to 717, down 1 point since the beginning of 2023. It is due to the rising consumer debt and an increase in missed payments. Total credit card debt is now more than $1 trillion. That's a record according to the Federal Reserve Bank of New York. CBS News business analyst Jill Schlesinger is here with some tips on how to improve your credit this morning. What's up? How you doing?
Doing great.
All right, so why are credit scores down? And for people who may not know, why are they important?
Well, let me just say that they're down by 1 point from almost 2-decade lows. So, we were at, let me just see, in October of 2019, we were at 706. Now we're at 717. So credit scores have been rising over time, actually.
Okay.
After the financial crisis, things got better. During this terrible COVID era, we got stimulus. We paid down credit card debt. But you're right, that 1 point dip happened because of inflation, I think.
So
people really did get a little bit behind.
Gotcha.
Higher score is better. You're shooting for an 800.
Exactly. Well, you're shooting for 850. That's the top score. But here's the thing. A credit score is important because it really allows companies to say, how worthy are you as a borrower? So the higher your score, the lower your interest rate on everything from a mortgage to a credit card to an auto loan. Something very important, though, about credit scores, also used to look for renters. People do background checks. They look at utility and phone bills, and employers in some states can look at your credit report, especially if you're close to financial or sensitive information, like in financial services or in healthcare.
And you improve it how?
So the way...
Once you get in the hole. It's happened to me before.
The number one thing is to pay your bills on time. I can't really emphasize this enough, that when a credit card company is looking at a late payment, it says, uh-oh, we're jacking your interest rate. And so what is happening is when people are late, we are seeing them fall behind even more. So you say, okay, I got to pay my bills on time. How do I do that? Automatic, really quickly to say, automatic from your bank to your credit card company, some amount of money every single month. Do not open new credit. Try to keep your debt levels down as much as you can. And if you're really rocking and rolling, don't close a credit card account. Weirdly, it can negatively impact your score.
So a lot of people don't have the money. That's why they're not paying the bills.
Right.
Medical debt is a big part of it. And I often wonder, do you have to pay medical debt, or is there...
So credit reporting will not put medical debt under $500.
Okay. Well,
but unfortunately, there are millions of Americans who have a lot more medical debt. What's important here is that if you pull your credit report every year at annualcreditreport.com, it's free. Be clear that you've got to correct any errors and do not pay for anyone to fix your credit or improve your score. You can do this. There is no quick and easy fix. Do not hire anyone to do it for you.
That's good advice right there. Thank you. All right, thank you so much.
Where were you 20 years ago?
I was right here.